Welcome back to the Canadian Income Tax Basics course. I'm your presenter, Danish Ghazi, and this is Module 3. In Module 3, we're going to take a look at the common expenses that are tax deductible in Canada. Lesson 1, medical expenses. When it comes to medical expenses, there are two important rules that you need to be aware of. One is the 3% rule. The second is the 12-month rule. The 3% rule means that from your eligible medical expenses, you are allowed to deduct against your taxes if you spend more than the minimum threshold. In order to figure out your minimum threshold, you need to calculate either 3% of your income or the amount that is set by the CRA each year. You take the one that is the lowest between the two. For example, let's say your net income is $60,000. Multiply that by 3%, you get $1,800. That means if you spend $1,800 in a calendar year or in your 12-month period, you will not get a tax credit. But let's say you end up spending $2,000. You are now allowed to deduct on your taxes $200 in medical expenses, which is a difference between the $2,000 you actually spent and the $1,800 minimum threshold. The 12-month rule, unlike most other expenses that you can claim on your taxes, medical expenses don't have to follow a calendar year. You are allowed to pick any 12-month period. Just make sure if you alter your 12-month period, you keep track of the dates for future years. You can also claim medical expenses for your dependents and for your spouse if they depend on you for financial support. Lesson 2, childcare expenses. Childcare expenses can be claimed as long as the purpose is to earn a living or for you to go to school. Now, there are limits when it comes to childcare expenses and how much you can claim. For example, Canadian taxpayers can claim up to $8,000 per child for children under the age of 7. And you can claim up to $5,000 for children between the ages of 7 and up to 16. Now, when it comes to boarding school or overnight camps, there are different limits. For example, you can claim up to $200 per week for children under the age of 7, $275 for an eligible disabled child, or $125 per week for children between the ages of 7 and 16. And here's a summary of all the limits for either boarding schools, camps, or just regular expenses that you can claim, shown here. Now, what kind of childcare expenses can you actually claim? Well, you can claim things like costs paid to a day nursery or daycare centers. You can also claim expenses related to nannies, overnight boarding schools, and camps that provide lodging. You can also claim expenses related to day camps, day sports schools. Now, when it comes to schools and camps, to be eligible, the primary purpose of the day camp or the day sports school must be to provide childcare. And in Canada, if you are going to pay an individual person such as a nanny or a babysitter and you want to claim the cost on your taxes using that $8,000 or $5,000 expense limit, you must provide their social insurance number when you claim those expenses. Lesson 3, self-employment expenses. Now, when it comes to self-employment expenses, any money you spend running or operating a business is considered to be a business expense, and you can claim it on your taxes as a deduction. Now, let's talk about some common business expenses that you can actually claim on your taxes. This is not meant to be an exhaustive list, but more so to give you an idea of some of the expenses that you are eligible for. For example, advertising fees, startup costs such as interest and fees on money you borrowed to actually start your business. You can claim things like delivery or shipping costs. Legal, accounting, professional fees are also deductible. You can claim things like office supplies, telephone, mobile phone, internet, as long as they're used for business purposes. You can claim things like utility costs, bookkeeping software. You can claim eligible car expenses such as gas, insurance, repairs, parking. And you can also claim meals and entertainment, but when it comes to this, you can only claim 50% of the cost. Some of the other things you can claim is that if you rent an office, you are allowed to deduct the rent cost and any other cost that goes with an office. If you have a home office, you can also deduct that as well on your taxes. Now, in order to determine how much of your home office expenses you can actually deduct, first you have to calculate the size of your home office and a percentage of what it makes up as your total home size. So for example, if you have a home that's 2,000 square feet and your home office is 200 square feet, that means you can claim 10% of the cost on your taxes. Lesson 4, retirement savings plan. Now, you may have heard of the term thrown around called an RRSP. Essentially, it stands for Registered Retirement Savings Plan, and it is a special type of account that helps you save money for retirement and save on taxes. When you contribute money to an RRSP, you get a tax deduction. That means you can lower your taxable income and pay less tax to the Canada Revenue Agency. For example, let's talk through two scenarios, one where you contribute $18,000 in an RRSP and one where you don't. What are the benefits? So in this example, let's say you make about $100,000 this year and you contribute $18,000 to your RRSP. That makes your taxable income $82,000. As you can see in the highlighted section, you're saving around $5,500 in taxes compared to if you did not invest into your RRSP at all. There's a real benefit about using your RRSP contribution row. Now, the other benefit of an RRSP is the money in your account is also tax sheltered. What that means is that you don't pay any tax on the interest, on the dividends, on the capital gains that your investments are generating within the RRSP. You only pay tax when you withdraw money from your RRSP, and by then, you are usually in retirement and likely have a lower tax rate. As you can see, there are real strategic benefits of using your RRSP. One, you get a tax deduction when you contribute to your RRSP in your working years. That money grows tax-free, whether it's interest, cap gains, dividends, etc. And when you withdraw your money, you are usually in a lower tax rate, so you get all the benefits. Lesson 5, work-related expenses. Now, as a salaried employee, you are allowed to claim some eligible work-related expenses as deductions. And the benefit of deductions is that they lower your taxable income and they lower the amount of tax you pay to the government. Now, in order to claim work-related expenses as a salaried employee, you have to meet two specific criteria. One, your employment contract requires you to pay these expenses as part of your job. Two, your employer does not reimburse you or does not give you a non-taxable allowance for these expenses. You also need to get Form T-2200 from your employer. What this form does is that it confirms the conditions of your employment and the expenses that you are allowed to claim. Now let's talk about some common work-related expenses that you can claim on your taxes. The first one is motor vehicle expenses. You can claim these expenses if you use your car or your own truck for work purposes. You can deduct the cost of gas, maintenance, insurance, license fees, interest, or leasing costs. But make sure you keep a log of your business trips and the kilometers you actually drove. 2, supplies. If you use your own materials or your own supplies for work, such as stationery, stamps, ink toner, you can deduct these costs on your taxes. Just make sure if you are going to claim any of these expenses, you keep the invoices and bills related to these expenses. You can also claim travel expenses. If you work for travel and stay away from home, you are allowed to deduct the cost of transportation, of meals, and lodging. Just make sure, once again, you keep the record of your receipts and the record of your trips. The other type of expense you can claim is workspace in the home or home office expense. If you work from home, you can deduct the portion of your home expenses, such as electricity, such as heating, such as rent, or your mortgage interest. But make sure you calculate the percentage of your home that's actually used for business or work-related purposes. The other thing you want to keep track of is the number of hours you spend in your home office space. In order to claim these expenses, as I mentioned, you need to fill out T-2200 from your employer, but you also need to fill out T-777 and attach it to your tax return if you're doing paper filing, or you submit it electronically if you're filing your taxes online. Just make sure if you're going to claim these expenses, you keep T-2200, your records, your receipts, in case the CRA is asking for them.